As promised, today Maria and I are going to drop the top 39 trades of the 122 trades that our fund is actually going to put on this week. You're going to have to wait till the end of the video to get those trades, but I really want you to watch the rest of it. It's only about 4 minutes long because it does explain how you should use these and some of the cautions we have with regards to these trades. Let's get into it. Opening your brokerage platform is a lot like entering a casino.
Success depends on understanding the math and finding games or trades with a mathematical edge.
After over 40 years as a professional gambler, I apply the same gambling principles to trading options. I want a mathematical edge, or I will not play. Backtesting verifies the presence of a mathematical advantage in trading options by analyzing the historical data.
Backtesting involves running historical market data through trading strategies to assess their effectiveness.
The only way to prove a mathematical advantage in options is through backtesting.
When Rob and I started trading back in 2020, there were no tools existing, so we manually had to track every trade, creating a personal database that revealed which trades were profitable.
Backtesting software has really come a long ways. At first, you could only test once a day. Then you could only test every few hours, and then every 15 minutes. Now you can test every single minute of every trading day going back years, and that makes a huge difference.
That means we can see the real probabilities, not guesses, not gut feel, but math based on thousands of outcomes.
Mastering the backtest software is crucial to effectively experiment with trading variables and improve strategies.
Experiment with key variables like premium, stop loss, entry times, and wing width to optimize trading outcomes.
After mastering the software, you test strategies repeatedly. Don't be fooled by strategies you hear on the internet. They all need to be backtested to make sure that they're legitimate. We try to find those with a positive expected value, even after commissions, fees, and slippage.
When a setup remains profitable, it's due to math, not luck. After creating trade logs, we use AI to generate spreadsheets of all positive expected value combinations. We then trade these strategies live and test the outcomes. Since our edge is only 4% of after cost, our robots must execute trades without mistakes. Humans just cannot match that speed and accuracy of our robots.
We run 18 to 25 SPX zero-DTE trades daily.
Today, we are showing our top 39 trades using only 2 strategies.
The first is the EMA, or exponential moving average.
Next is the MEC, multiple entry iron condors.
We looked at every 7 minutes going back 6 months, 8 premium targets, 2 strategies like Maria mentioned, 6 stop loss levels, and 5 wing widths.
Over 3.7 million combination of trades. These are the top 39 trades.
We look at trading in increments of $3 million, so that serves as the total capital base for trading allocations and sizing in this particular presentation.
For each 3 million account, we allocate 33% of our buying power, or 1 million to SPX zero-DTE trades.
Now, each SPX trade uses 150 wide wings, requiring around $12,000 in buying power per trade. And here they are, the 39 best trades. Let me explain this chart. Clearly you can see this is the entry time. This is like a stoplight, green, yellow, and red. Because this is a $3 million account, we're using $1 million in buying power. We're going to buy 3 lots or sell 3 lots in the green, sell 2 lots in the yellow, and sell 1 lot in the red. You can see the strategy. This is a MEC. If it doesn't say EMA, that means it's a MEC. You can see the premiums and the stop losses for each one of these. This shows you the total profit that you would have received trading the last 125 days. Here's your compound annual growth rate and your max drawdown. This is the MAR ratio, which is a ratio that was developed to show your risk versus your reward. We like to see that over 7. Here's the average margin required for each trade and the normal premium that you would expect to collect over 125 last trading days. And then here's the premium captured. We normally get between 7 and 20% capture rate, so these are extremely good. We like this diversity.
That keeps the exposure balanced and rewards the strongest statistical edge.
So for those of you that wanted to do a screen capture on what these are, here it is. I'll give you a quick countdown in 4, 3, 2, 1. You can always pause the YouTube and do a screen capture and get these. But again, be very, very careful using this trades. If you don't understand the risk involved in doing EMAs or MEX, then I suggest that you read up about it before you put them on. Don't just copy our trades. In fact, this is not financial advice. Let's go to the warnings here. Trades rely on mathematical analysis rather than guesswork, emphasizing data's power in decision making.
3.7 million back-tested trades weekly. We use AI to refine, filter, and analyze our database.
Tomorrow's winners are discovered by analyzing today's data patterns.
We target 4% per month in these trades, but remember what the lawyers always say.
Warning, warning, warning. Do your own research. Do not copy our trades. Look for your own trades. This is not financial advice. These are just some of the trades we expect to put on this week. Past results are not indicative of future performance. You should do your own backtesting to decide what your risk tolerance is. Trading options can cause you to lose all your money. Be very, very careful. Having said that, this is some of the trades we're actually going to put on today. If you like this type of video, please mention it in the comments below or reach out to us because we want to know whether or not we should keep doing these every week. Thanks a lot and have a great trading week.